Welcome to Money Isn't Everything. I'm Mary Wisniewski, Cornerstone Advisors editor-at-large and host of the show that explores early-stage ideas that's shaking up financial services, if not already, soon. On the show today is Huw Davies, who is the chief executive and co-founder of Ozone API. And this is a company that helps banks all over the world implement APIs. Huw has also worked at banks, so he's multidimensional. We had a really lively convo on what's becoming quite the soap opera over here, to charge for data or not, and/or how to make it fair. So we get into JPMorgan Chase plan to charge data aggregators access to data from the bank's API. And there's a bonus here because he has a much wider perspective with all the lessons learned from other countries, including the ways to commercialize the model. But maybe not for every API. Here's our convo. Huw, welcome to Money Isn't Everything. Thanks so much for joining me here on the show today.
Thanks, Mary. No, it's a pleasure.
Yeah, I'm so excited to talk to you because I saw your LinkedIn post not too long ago about, having a hot take on JPMorgan Chase planning to charge data aggregators. And you have such a wider perspective on this debate because of your work in the UK and other countries. So we're going to grill you. But to set the stage, what kind of ripple effects are you expecting from, the biggest bank in the US saying, hey, data aggregators, you're actually going to pay me for, using my API to get bank data?
Yeah, well, it is a big, bold move. And I think there's already a number of effects, ripple effects in terms of just the reactions of the different players in the ecosystem. Probably the timing is very considered. We're at a point where there's a period of hiatus around the 1033 regulation and the regulatory path around data access and consumer data rights and open finance in the US. And I suspect that is a big part of the decision around timing. Whilst there's this hiatus in terms of the regulatory momentum, it looks like opportunity is being taken to sort of reset the game from a commercial perspective and charge for or set some fees for third parties to access this data. It's a complex value chain. So you have in open banking, you have the banks exposing the APIs that enable access. You've got this industry of aggregators or data access providers that create that connectivity into the different banks, but also do a whole load of other stuff around the normalization and the categorization of the data. And then you've got all of the many different apps and services that use that access to help solve customer problems. Fundamentally, I think it's going to create some challenges to the business models through that value chain, because right now they're based on not paying the banks for that access. So it's a big, bold move that I think will have knock-on implications in the value chain. But it drives a really interesting debate. So I think what we're seeing is some very strong, almost it's zealot-like, the strength of opinion from different players, depending on which side of the ecosystem they sit. Personally, I think it drives a really important debate around the ongoing business model and how you create a long-term sustainable ecosystem that's good for the end customers.
Yeah, and I want to get more into that, but I want to underscore also this big debate because it is remarkable. I haven't seen something so heated probably since here in the US. It's like credit unions buying banks, and there's always like a fury around that. But like this is like one of the hottest issues because on one hand you have the banks saying, it's like, hey, this is for security. Also, we're paying for the infrastructure cost, and that price is going up with so many dings coming to us. And of course, on the other side, it's like, hey, bank, you're a jerk. And you're like claiming the data as yours, but it's the customers. And like, from my standpoint, this is a storyline I used to cover at American Banker. And it just seems it's just not black and white from my standpoint. I think it's very murky. And sometimes there are villains, but in this particular story, I think it's a lot murkier of what's the best path forward. But you kind of already said this, so I'm just going to get right into it. One segment here that we have is, that's what you said. And that's what you said is something you wrote on LinkedIn. And it underscores also what you were just saying. And it was Personally, I think this is exposing an important debate. For open banking and open finance to really unlock the true potential, providing great APIs needs to be a value and revenue generating activity for the banks. There, I've said it. Let's talk about what you said, because that's a provocative point of view. So tell me why you think that.
Yeah, and you're right. It generated a huge amount of debate. I actually did that post just before I was leaving for vacation.
Oh no.
And the next day when I was at the airport, I was actually flying over to Florida, and feed was going crazy. It really generated a lot of debate. But no, I believe this quite strongly, that there has to be a balanced commercial model around open banking, open finance, for it to be really sustainable and value adding for end customers in the long term. That doesn't necessarily mean I think this move is the right one. Mm-hmm. But for banks, I guess historically their core channel to market has been their branches, their mobile app, their online banking. Now, in this new world, APIs act as a channel, a way that banks can embed financial services experiences wherever their customers are. So in third-party platforms, in marketplaces, embed better ways to pay in digital journeys. So I think it becomes a real core part of the business model. Now, we're working with many banks around the world to help them implement their open APIs. And we're seeing a number of different strategies around commercialization. Now, actually, in many countries, customer data rights are regulated. So there are quite a few markets where actually it wouldn't be possible to charge for access to basic information like balances and transactions. In a number of different countries, that's seen as a data right. Mm-hmm. Banks have to implement the capabilities to allow trusted third parties to access it on the customer's behalf. But that doesn't mean there shouldn't be a business model that helps drive a really good return on investment for banks to have great APIs. Now, that can come from enriched information, so doing more than just basic balance and transactions. Banks can help customers unlock identity because they've spent a lot of time getting to know their customers, validating their identity, and that can help third parties. There's a lot of space for monetization of complex payments and solving the payment value chain. These APIs should be a way that banks can embed what they do so they can help serve their customers, potentially win more customers, provide more products. So I think there needs to be a clear strategy for banks to how they really drive a return on investment on the infrastructure they're building. There's a really strong point of debate around this concept of consumer data rights. And I think that's what this particular announcement really got to the heart of, because it's some of the simple access that's being charged for. And that's where there are a number of very passionate industry players who say this is a data right. You can't charge for this. And equally, there are a number of others saying there's real infrastructure that's being built. And the right answer is somewhere in between the two. There is real infrastructure that's being implemented. There needs to be a clear strategy. Personally, I don't think in the long term, I don't think that's going to be from trying to heavily monetize really simple basic data that in many places is a customer data right. However, I think it shines a light on a really important debate within the industry. I think we're seeing that with the amount of passion that it's generating.
Yeah. And the pricing, yeah, that's its own, because some people will agree like, oh yeah, a bank can charge for this, but it's the price that really matters. And I know I've seen a lot, I don't know the exact prices that Chase said it was going to charge, or the starting bid war, if you view it that way, like we'll bring it down. That's our starting point. But, that seems to be another argument of just like, oh, it's too high. It's sort of like the overdraft fee argument of like, a lot of people have come to realize like, oh, some people do want overdraft, but it's like the amount that a bank is charging that's like onerous in the digital age. So I sort of view it as that way too. But I love your point of like, hey, maybe you don't charge for the balance, getting the balance of the account. But like, what's some advice to a bank wanting to charge for something like this, but using your, like, I don't know if we call it philosophy or just like your opinion of you got to tier price this. What's the magic to the math, Huw?
Yeah, and I don't think there's necessarily a simple answer. I also think there's more to this than a straight transaction. I don't think it is a coincidence that this has happened as the CFPB has been going through a tumultuous series of changes. The 1033 has been the 1033 regulation that would have created a framework around this has been under attack and is potentially going to be rewritten and has been under legal challenge. So I think the timing of this is not coincidental for a start. But I think as I look around the world, there are different ways that this is being done. So in a number of markets, there is very clear regulation that says a certain level of data is a customer data right and must be made available. And we see that in markets like the UK and Australia, where consumer data right extends across a number of different industries. You hear the same arguments, actually. This has been a huge investment for the banks, and it's tough. And you see the banks sort of fight the case a little bit. What we are seeing in some markets is very deliberate attempts to create a commercial model that is intended to be balanced. So in the UAE right now, open finance is being implemented, and at a central market level, they've been defining what's the right pricing model. So it can be proportionate, recognize there needs to be some value to the banks, but it's also about making this scalable as an alternative to other card mechanisms. I guess the one thing you see consistently around the world, and the political environment looks a little different in each country, and politics with a small p, but these things, for them to be sustainable, pricing needs to be proportionate. So if in a market-driven environment, pricing ends up being disproportionate and punitive to different parts of the ecosystem that impact customers, usually that's the thing that triggers more regulatory intervention. Regulations are normally around protection and forming guardrails, and also tackling kind of imbalance within a marketplace. So I think if banks, and I don't know what the pricing looks like, I'm not sure that's been publicized. But I think for any bank, if pricing seemed disproportionate, then it's more likely to get the attention of the regulators. I think the US is sort of uniquely market driven in the way open banking and open finance has developed over the years. And I think that's helped achieve a huge scale market as a standard that's been developed by the industry through FDX, and that's been sort of widely and increasingly adopted. There's some kind of great aspects to the US market. I think there could be a risk, though, if monetization is done in the wrong way. It could create bad market forces, and ultimately that usually leads to some sort of regulatory intervention. But as I don't think there's a coincidence around the timing of any of this. I think it's interesting timing.
It's interesting timing. I'm also thinking another big controversy in the US recently was Sydney Sweeney made an ad with American Eagles about jeans, and also interesting timing. So that caused a big stir. So like, yeah, when you announce something, it does matter the win of doing so. But and then you can, to your point of like, oh, then the regulators will probably come back in, because now the CFPB is saying perhaps it will be revising the rule. So it's just a kind of a really wild ride that we're on this year.
And it's been such a soap opera. And I mean, it's a rule that's been under development for a long period of time.
Oh my gosh, so long, where it's like, wow.
and it's had so much industry consultation. Now, I think, of course, there are always tweaks and improvements. For me, it would feel a hugely retrograde step to go back to the drawing board. It feels like that's the direction of traffic, but there's so much industry work done on this. And I think ultimately we've seen in other markets, creating clear frameworks, making sure there's a common standard, that acts as a real catalyst for innovation and investment and all of those things. So we'll see how the soap opera plays out, but it's definitely been a soap opera.
Yeah. And we didn't even talk about this yet, but like the crypto crowd is like, oh, it's Operation Choke Point 3.0 or whatever. So that's just a whole other bag of chips. But Huw, since you have such like a wider perspective, I do want to drill into more of like perhaps like lessons learned from other countries or like things that perhaps slow down. Let's start with the UK of like the open banking rollout, things that you would say, hey, maybe if you're doing it now, avoid this. You know, any like clear lessons that you think would transcend geography?
It's a great question. I think we've seen with each market that's implemented open banking or open finance in whatever form, there have been some really clear learnings that came through. I think the UK did a really good job of creating a starting blueprint. And the thing the UK really got right was having a strong and well-defined API standard. Because if every bank does this differently, it's really hard to drive the value. It's like if every electrics manufacturer had a different design for a plug socket, the world's just much more inefficient. And I think in the UK, we saw a really strong foundation of technical standards that allowed the implementation to be that much more successful. Europe, the same thing didn't happen, and the whole rollout took an awful lot longer. And we've seen that in many other markets. And in the US, the Financial Data Exchange, FDX standards body set out to do exactly that and done a great job in creating a common standard. I guess one of the big learnings in the UK was actually related to this point. There wasn't a clear sort of set of incentives or value case for the banks. It was actually initially positioned as a penalty by the competition regulator. Now, I think what we have seen is there is a huge potential for these APIs to be a real business driver for the banks, as I mentioned, whether it's sort of value-adding APIs or the ability to embed payments and other services in new ways. Done well, this should be a huge value driver for the banks. But it started off in quite a confrontational way, being positioned as a competition intervention in the market. The banks were forced to do it, and there were really important areas where the right conversation didn't happen about a balanced commercial model. And the UK is now trying to catch up with that, and they're looking at how do you create a commercial structure around open banking payments, because that's an area where there's real cost, there's real risk. You need some form of commercial model, and if it's not designed at scale and every single party is having to do individual negotiations, you'll just never scale. I think we've seen that in a number of markets. And as I look at the other markets that have gone since, we've seen markets focus on a few of the learnings. So one thing, we've seen regulators be a lot more conscious of what are the positive reasons for doing this. Mm-hmm. So if you're implementing open banking or open finance, why? What's the long-term vision? How is it going to help tackle financial inclusion, drive investment, drive job creation, real GDP impact? And then it gets designed in the right way. So we're seeing countries be much more thoughtful about that. Standards continue to be at the heart of this. For it to work, you have to have strong technical standards. What we're seeing increasingly, though, is much more of a focus on what are the different types of use cases and how do you create a balanced commercial model? I mentioned the UAE, they're being very, very thoughtful and designing some of that into their outset. In India, we saw their digital stack, which includes payments and data access. Initially, everything was driven without any cost, and it acts as a huge economic stimulus. Now the industry is talking about how do you create the right pricing model around payments. So I think the discussion in the US is exactly the right one. It's just happening in quite a polarizing way because of the timing and and the way it's been introduced in the midst of all of the discussions around 1033. But yeah, there's some really valuable learnings from around the world. I don't think there's a perfect blueprint just yet. There's lots of learnings from each market.
Yeah, no, and it's really helpful to hear some of what, that you've observed, because I think it's very instructive. And yeah, it usually doesn't work so well to lead with like a negative, like you're doing this because you're a jerk, doesn't usually sell it. But knowing that and just thinking more, and also I should tell listeners and or viewers that you worked at banks. You've had that as a professional experience. So I think that's really interesting too. So just knowing that, and to your point of like, there are revenue possibilities here. There's likely, it's such a big word, but innovation to develop that would lead to more new revenue sources in some ways. But I guess let's just talk a little bit more about that. Like, what could that look like, or what has that looked like elsewhere?
Yeah. And I've spent the largest part of my career working in some of the big global banks.
The red tape.
Spent a number.
Yeah.
Sorry?
The red tape then.
Yeah, exactly. And I must say, when this whole shift towards an API powered business model came along, at the time when PSD2 in Europe came along, I was still in HSBC, and I got really excited about it. I thought this was the biggest change to the banking business model that had happened in my 30 years in the industry now, because fundamentally it's creating the ability to embed financial experiences in the right place at the right time for wherever the customer is. Fundamentally, that's the opportunity. Mm-hmm. It isn't purely about access to balances and transactions. This is about a new business model for banks that means they can be anywhere. If you just look at what Google have done with Google Maps, they've created an incredible platform. And because it can be embedded in any sort of third-party experience, it's really pervasive. That's the opportunity for banks if they do this in the right way. Now, we're working with a number of banks around the world a lot of the banks are trying to work through what is the right commercialization model around their APIs. And the way I see it, I think there are some types of access that probably they're going to be commoditized. It's either very low or no fee and this might be things like basic balances and transactions. And as I said, sometimes that's driven by regulation. It's a right to access that data. In other places, I think where there is charging, it's going to be commoditized race to the bottom, because the real value comes from more complex stuff. So we're starting to see banks look at how do they monetize more enriched information, for example, helping their customer assert that they are who they say they are. Perhaps that could be an age verification API, or a set of or an API that allows a customer to really easily onboard with a service through their bank, saying, yeah, this is Huw and this is his address, and all of those things. So we're seeing some monetization around some of those areas, around identity attributes and enriched APIs. A lot around payments, again, API initiated payments. So you can embed a transaction journey anywhere. We're seeing a lot of pricing models develop there. We're also seeing there's a whole load of APIs that banks can expose that, frankly, they'd probably never want to charge for, because they're creating a route to get to new customers and sell more products. So if you're a business bank and you've got great APIs that allow a customer to request a loan at the point that they need it, and you can get that embedded in an accounting platform. So the minute you see a cash flow crunch, you've got access to additional lending. Actually, the benefit for the bank here is just growing customer relationship, not a charge that you'd earn from an API call. So we're seeing different business models, and sometimes that's going to be driven around, it might be charging per API calls, or charging for different bundles of activity, or charging for a payment or a value of a payment. I think we'll see a lot of different models come out, but we're seeing banks start to really test and learn. I don't think anyone's doing this at huge scale that's transforming the banking business model yet. But I think these are the foundations to transform the banking business model in the long term.
No, it's really interesting. And then you just got me thinking about how, yeah, there are banks and credit unions here that are like, they let customers link in their, outside bank accounts too. So like they are also using this technology. And I think that's been like a sleepier point in this more recent debate of like, oh yeah, you actually use this too sometimes.
It's interesting in a few markets. So there's often at the beginning a discussion around, is this going to increase switching, and do the banks get
Yeah.
worried if the data is available? I think what we've seen in a number of markets is actually no, people tend to stick with their main bank account, and some of the biggest users of open banking access, and I think this is the same in many markets, are the banks. The banks want to be able to get that broader view of a customer's portfolio during a lending decision. If you can view what's happening in other accounts elsewhere, you get a much better view of the customer. So actually, yeah, the banks are often some of the biggest users and biggest beneficiaries of this access.
All right, underscore, even though I'm drawing the exclamation mark. So I want both. And then I'm also curious because, like there is a lot of confusion in the States. And so like, if you had any recommendation to a bank or a credit union that's like, what do I do now when there's all this regulatory confusion or lack of instruction? Do you have any advice there? And I know it's a really big question, so take it whatever direction you want to.
Yeah, absolutely. I guess an absolute statement of truth is that many consumers and businesses in the UK really like using some of these fintech and financial management apps. So this isn't a question of when do I do this. This is a real market right now. Banks are either exposing really good APIs that are allowing secure, structured way of accessing that data, or they're being screen scraped by third parties who are the customers giving them their credentials so the third party can connect as if they were the customer, which obviously is a little more concerning.
Mm-hmm.
You want this to be based around really strong technical standards with very, very tightly defined consent around all of the access. So, I mean, frankly, these third-party services that rely on bank data to work, they're highly used by millions and millions of citizens and businesses in the US. So for banks, this isn't an if. I mean, this is happening. This is real now. I think the best way for a bank to control their destiny is actually have the technology that enable them to deliver really good APIs, because then it's secure. There's much more control around the consent, but also it's that platform that they can then start to drive innovation and new and interesting business models. I mean, this is what we do. We built technology that and a platform that helps banks really quickly implement the APIs in line with the right standard for wherever they are in the world. So I think, I mean, very clear recommendation for banks. This is already happening at significant scale. It's much better to be ready. The regulation is okay. What will happen with 1033? That's still got a little bit to play out. But fundamentally, this is core infrastructure for how a bank needs to operate in the future. And there are, as I say, really interesting opportunities to create value and drive new revenue streams.
Huw, that's a wonderful way, I think, to wrap up our convo, except I'll have one more question. But before then, yeah, if a banker or a fintech company or a credit union wanted to reach out to you to just, raid your brain or work with you, what's the best way?
Well, you can find out more about us at ozoneapi.com and connect with me on LinkedIn, or find me by email. So I'd be very happy to talk to anyone. I think this is it's a fascinating debate at the moment.
It really is. And Huw, last question. What is the image on your phone's lock screen?
Oh, well, it switches throughout the day. At the moment, actually, I've just checked. It's my oldest son when we were on holiday, but
Aww.
It flips around during the day between kids, dogs, family, all sorts of stuff. It changes all the time.
I need to change mine where it flips a bunch. Well, Huw, it's been an absolute delight. We've been in for a real treat to be able to quiz you about one of the hottest topics in banking and fintech right now with your wider experience. So thank you so much for joining me today.
Thanks for the opportunity, Mary. It's a pleasure.
If you enjoyed today's Monies and Everything episode, make sure to hit that follow button on Spotify, Apple Podcasts, YouTube, or wherever you're listening. I've got more riveting, interesting, funny conversations coming your way, and you won't want to miss them. Next up on the show is Sam Lewis, who is the founder of Fruitful, which offers a financial planning tool. Catch you then.